Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So gold perfectly has completed our stop on intraday charts, on the daily as well, actually. Well, just one of the examples. Sometimes happens that our patience is rewarded by the price action. It happens rather often. So in general, what we have on the daily? On the daily, market hits the major support, 1758, has formed a bullish grabber here, and is now coming higher. So currently, it is relatively safe to consider taking the long position because the market is standing taken out of the previous top. So this grabber, by the way, is also completed as market dropped below the recent lows. We do not need anymore. And market returning back in the flag consolidation, which is also bullish, which could suggest that this breakout is kind of the failure breakout or false breakout. So although we're not sure that this upward action will lead us to extended performance or to some real reversal, but at least it might be a bit more extended in the short term. So here, for instance, you could consider minor head and shoulders pattern around the bottom on the daily chart, right? So it might be left shoulder and head, so right shoulder might be formed, and then market could show at least the kind of the ABCD retracement. So this is the minimum target or scenario that market could achieve with this upward action. At least market should take it out of this top, since we have the grabber here, and overall impulse here, momentum is not really very weak. That suggests a possible upward continuation in the short term. But at the same time, speaking on the longer term, we have some doubts on this performance because it has really big signs of just profit booking from the speculators. It's not really looks like the decisive reversal or something of that sort that we usually prefer to see on the Fed statements. It seems like investors who have taken the short position with anticipation of the more hawkish statement, and once they have got it, it's just closing the position. Because the same performance we see on the Forex market and as well on the Bitcoin, it's also very lazy action. So it's not the way how market usually reacts on the decisive Fed statements. So that's why currently we really have some doubts that it might be very short-term performance. And we call do not set really extended targets that market return back to the tops of the 19 even or so on. Trying to set minimum target, some kind of the ABCD extension somewhere around 18 even or maybe slightly higher. This would be better in the current circumstances. Another reason why we suggest the market could go higher is just take a look. We have the 3 drive that we discussed. Thrusting action exists here. Bullish reversal candle stands. Market reacts up perfectly from the 3rd drive bottom as it suggested. And as you know, the target of the 3 drive at least the top between the second, this top between the 2nd and 3rd drive. So it agrees with the grabber from that standpoint. And it means that market could move slightly higher. So here you have a few options. If you intend to possess yourself for the upward action, you could, for instance, trying to catch some minor retracement here on this recent upward action, anticipating of the upward action and taking out of this top, which is suggested by, or even this top, suggested by the 3 drive pattern and the grabber that we have on the daily. Here maybe it makes sense to consider even near standing levels from another action point. So drop your time frame more for a 15-minute chart, for example. Keep an eye on the possible high standing fib levels, because in the current circumstances, hardly we will get the reaction right to the 1775. So it probably will be a bit smaller. Or alternatively, you could wait for the hand shoulders that I have mentioned. So for instance, this could be left shoulder. Once head will be completed, the market hits the neckline, then you could watch for a pullback here and see whether you would like to take the long position or not. This is alternative approach to the same scenario. Now this is more short-term for trading today and tomorrow. That's more extended. Probably it will be realized only next week. So that's actually what we have on the gold. Those who have taken the position based on our free drive that we have discussed, well, just accept our congratulations with a good entry. And now you could just enjoy the rally, watch TV, move stops to the break-even and see what will happen. So that's what we have on the gold. Let's see how the situation will develop here.